Hey folks, this is Mansoor Sahil from My Learning Center, your instructor. Here is the mini course I have prepared for you folks. The course is How to Develop Financial Skills for Business Success. What are we going to cover in it? Let me give you an introduction first. Financial management is critical for building a roadmap for achieving business goals, managing the inflow and outflow of money, and finding ways to cut costs. So here is your roadmap through the course. Establish a pro-finance mindset. Separate your personal and business finances. Apply basic bookkeeping best practices. Interpret your balance sheet, profit and loss statement, and cash flow statement. Create a picture of your business's finance. Review your personal finance needs. And finally, assess your business's health and create an action plan. What you will be able to do after you finish this course. Adopt the mindset for sound financial management. Separate your personal and business finances. Apply bookkeeping best practices. Identify the 3 key financial reports and why you need them. Assess your business's financial health. Determine what to do if your business can't support you. Assess your business's health and create an action plan for improving your financials. In Module 1, we'll cover the impact of financial management on your business success. When running a business, cash is everything. Tracking expenses and profits leads to smart financial decisions. Problems of poor financial management. Number 1, cash flow struggles can hurt relationships with suppliers, affect credit ratings, cut into personal funds or credit, decrease employee morale. Number 2, mounting debt could force bankruptcy. Number 3, limited growth, hard to stay competitive. Benefits of sound financial management. Improved cash flow management. Helps identify and budget for expenses. Gives you financial data and insights. Reduces energy and time spent on managing finances. In Module 2, we cover, is it personal or is it business? Lesson 1, keep your finances separate. Protect your personal assets. Accurate reporting for taxes. Track financial health of your business. Why keep your finances separate? Maintain a clear picture of your company's cash flow, financial health. Build business credit score. Take advantage of tax deductions and benefits. How to keep your finances separate. Open separate bank accounts for personal and business. Set up a separate credit card for your business. Keep record of expenses for business. Review monthly. Pay off monthly. Keep detailed and separate financial records. Consult with a professional. Lesson 2, we talk about identify your business expenses. Business expenses are costs incurred to generate revenue, operate a business. Personal expenses are costs incurred to meet individual needs and goals. Not sure which is which? Review the purpose of the expense. Check if it's typically personal or business. Consider the timing. Document your reasoning. What do we cover in Module 3? Set up your financial systems. Lesson 1. Essential bookkeeping practices. Bookkeeping is a process of recording financial transactions, organizing transactions, maintaining accurate records. Number 1. Establish internal controls. Minimizes the risk of fraud. Review bank transactions yourself. Segregate financial responsibilities. Number 2. Use accrual accounting. Accrual accounting is recording income and expenses at the time they are earned or incurred, not when money is received or paid. Provides a more accurate picture of a company's financial position. Helps to better forecast future cash flow. Makes it easier to compare financial results. Number 3. Categorize transactions by type, function, account affected like receivable, inventory, fixed assets, location, project, or department. Lesson 2. Select and start using bookkeeping software. Use software to keep track of financial records. Benefits include automate manual processes associated with bookkeeping, generate reports, streamline tax filing, reduce errors, sync all financial data. Must-have features. Number 1, generate balance sheet, profit and loss, and cash flow. Number 2, month-over-month reporting. Number 3, invoicing. Number 4, bill pay. And number 5, payroll management. Review your finance-related processes yourself to ensure bills are paid on time. Books are accurate and up to date. Follow up on unpaid invoices. Reconcile bank and credit card accounts monthly. And finally, what's next? Plan your taxes in advance. Module 4. The 3 key reports you need to understand. Lesson 1. The 3 financial reports that tell all. First one is balance sheet. Assets equal liabilities plus shareholders' equity. How to use. Evaluate size of assets and liabilities. Determine cash and credit available. Obtain financing from banks or lenders. Make decisions about resource allocation. Profit and loss statement. Revenue, cost and expenses. How to use, measure overall business performance. Identify potential for increasing profitability. Insights into spending activities. Compare performance over time. Cash flow statement. Cash inflows and outflows. And we talk about how to use. Track money flowing in and out. Analyze where your money is going. Find these reports in your bookkeeping software. Lesson 2. How to interpret your balance sheet. Number one, identify your current assets, cash and cash equivalents, inventory, accounts receivable. Number two, look at non-current assets, tangible assets and intangible assets. Examine liabilities, current liabilities and long-term liabilities. Understand stakeholders' equity. Net worth of your business includes initial sum you invested. If reinvest earning, include in shareholders' equity. Number five, calculate cash ratio. Cash ratio is cash plus cash equivalents divided by current liabilities. Ratio over 1 is best. What can you tell from a balance sheet? Asset and liability composition, liquidity, solvency, growth. Lesson 3. How to interpret your profit and loss statement. Components in a P&L statement. We have revenue, cost of goods sold, that is COGS for short, gross profit, operating expenses, depreciation and amortization, interest expense, taxes, net profit or loss. Analyze your profit and loss statement. Total profit or loss, income streams and expenses. Calculate gross profit, that is revenue minus COGS. Compare current and previous. Lesson number 4. We cover how to interpret your cash flow statement. How much money came in and out of your business? Sections. Operating activities, investing activities, financing activities, net cash flow and ending cash balance. Look at cash at beginning and end of period. Cash going out. Did cash balance increase or decrease? Module 5 covers manage your finances moving forward. Lesson 1. Forecast future sales. Forecasting. Making predictions about future financial performance. Why is forecasting future sales important? It helps us set goals, give potential investors a clear picture of performance milestones, identify risks and opportunities, visualize how your business will operate as it grows. How to do a sales forecast. Track your business's data. Determine your sales cycle and categories. Use the general business forecasting method. Formulas to help calculate sales forecast. Average monthly sales equals total sales revenue divided by number of months so far. Possible sales for rest of year equals average monthly sales times number of months left. Annual sales forecast equals total sales revenue so far plus possible sales revenue for the rest of the year. Factors that might impact sales. Overall state of economy. Competition in your industry. Pricing strategy you follow. Business reputation in market. Business location. Lesson 2 is about estimating expenses. Types of expenses: fixed, variable, direct, that is cost of goods sold, one time. Fixed expenses: pay regularly regardless of business activity, like mortgage, fixed salaries, for example, admin staff, taxes, for example, property, insurance. Variable expenses: these can change from month to month. For example, utilities, marketing, advertising, and travel. Direct expenses, that is cost of goods sold. Expenses directly associated with production and units sold. For example, inventory purchases, raw materials, shipping costs, direct labor costs. One-time expenses, not necessary for day-to-day. For example, new equipment, renovations, training, legal and consulting. In lesson 3, we cover creating a budget for your business, a spending plan to help you allocate resources, track expenses, monitor progress towards financial goals. How to create a business budget. Note: all operating expenses you might incur that are fixed, variable, one-time, unexpected. Number 2, analyze previously recorded revenue. Number 3, set money aside for known costs, for example, rent, supplies, salaries, and subscriptions. Number 4, set aside a contingency fund for unexpected costs. Number 5, factor in seasonal and industrial trends. Look at past performance. Research trends in market. Number 6, set spending goals for your business. Review and update your budget frequency. In Module 6, we cover what about you? Lesson 1, calculate your personal expenses. List all your income sources and expenses. Track your daily and monthly expenses. Categorize and prioritize your expenses. Calculate your personal expenses. Can use online calendar. Identify potential cash flow issues. What to do if you are short on cash? You can reduce expenses. For example, cancel unnecessary subscriptions. Avoid eating out. Cut back on non-essentials like travel. Ask for extensions on larger bill payments. Review credit card payments and due dates. Avoid late fees and interest. Prioritize bills. Seek out new sources of income. In lesson 2, we cover what if your personal income is not enough? Consider carefully adjusting in one or more areas. Business expenses. Speculative marketing. Non-critical staff. Software or office expenses. Debt payments. High interest rates. Business savings. Reduce to zero if absolutely necessary. Moving along in Module 7. Take stock and outline a plan. Lesson 1. The numbers that tell you how is business. Number one, revenue growth. Current revenue divided by past revenue. If the ratio is greater than 1, it means you are profitable. Number 2, expense growth. Current expenses divided by past expenses. Okay to increase if revenue is increasing. Number 3, gross profit margin. Revenue minus direct expenses is gross profit. Gross profit divided by revenue is equal to gross profit margin. Healthy margin depends on industry. See examples in the course book. Number 4, net profit margin. Gross profit minus all other expenses equals net profit. Net profit divided by revenue equals net profit margin. Always should be positive. Lesson 2, create your financial action plan. Need to cut costs? Reasons. Not enough profit. Can't operate with current funds. Want to increase efficiency. Prepare for downturn. Potential strategies. Lower biggest expenses. Dig deeper to identify why overspending. Find new automations and cut labor costs. Need to increase revenue? 3 main reasons. Fund expansion. Pay off debts. Invest in new equipment or tech. Potential strategies. Find new customers and increase retention rate. Increase pricing if possible. Offer new products or services. Streamline operations. Need to increase cash flow? Possible reasons: unexpected expenses, late customer payments, high fixed costs. Potential strategies: increase prices, improve payment collection process, negotiate payment terms with suppliers, reduce expenses. Create an action plan. Check your numbers every month for accuracy. Module 8, Summary and Next Steps. What you learned. Follow the course thoroughly and understand each module. Refer back to the course when needed. Try answering every action step in each lesson. Answer these questions. What have you learned about how to manage your business financials? What difficulties have you encountered? How do you plan to address any issues? What further steps can you take to become comfortable with managing your business financials? Additional tips. Set a date for financials at the end of each month. Regularly review your income statement and balance sheet. Take advantage of available resources and tools. Stay up to date with new financial policies or regulations. Thank you for watching this mini course. I hope to meet you in our full-length course, How to Develop Financial Skills for Business Success.